Okay, so let's stay away. Let's veer away from that, the Hpal at the moment, and come back to investing, because you gave some clues about the sorts of things people should look for. So first of all, we should probably identify the type of investors who would invest in nickel, because this is not an overnight day trading scenario or even get out in the next 6 months or so. If you're coming in now, and I guess you would advocate getting in now, or would you?
Well, I would say if what do you think the average amount of money your investor has to invest? Do you think $5,000, $10,000?
Don't know. There's all sorts in there. There's so many of them. But average is difficult.
Okay, well, let's just say you have $1 to invest in nickel. I don't think I would just go buy $1 worth of nickel equity today, right? Like, I think you want to cost average in over time. But certainly, what we saw in rhodium and palladium, and a lot of other commodities, is they can move really quickly. And so if you actually do subscribe to this notion that EV adoption is generating new demand that's going to impact the price of nickel, like if you subscribe to that notion, that investment thesis, then I think you over time want to average in to these nickel names. I wouldn't go spend all my nickel allocation today.
Okay.
Especially in the face, by the way, of a lot of uncertainty around coronavirus.
Absolutely. Okay.
But I would think that over time you would want to leg into it.
Okay. I think that's fair, and again, reasonable. Like I say, there's a lot of people come and talk to us and tell us how much of their commodity they're going to put into a battery, and the EV revolution is going to change their company literally overnight. You need to buy now. And I just think sometimes, for some companies, well, for a lot of companies, that's not true. They're so far away, so far removed from the EV chain.
Well, timing is tough. Like, look at lithium.
Right.
Lithium has moved. I mean, some of these names, they move overnight. Lithium Americas. I mean, just on a rocket ship lately, they announced this deal, which effectively takes away the operatorship. They get money in.
Yeah.
Now it's going to be built. So this thing goes on a rocket ship. But you can't. So I would just say, as an investor, it's hard to predict. So one of the things I would consider, I guess, when I look at some of these names is making sure to own some names that don't require capital raises, because if between now and that move, it's 2 years, let's just say. If you look into that balance sheet and you can see that they're going to need 2 capital raises, well, just wait and go in on the capital raise. So I think, in particular for the juniors, this is relevant, because like from my perspective, if you're going to invest in nickel, let's own a basket of names. So own Independence Group, right? And this is an adult company. It's producing nickel, and it's hard to foresee that they're going to raise capital. Now, you're not going to get as much torque as you would in like a Giga with Turnagain, right?
Right.
But at the same time, it's a much safer bet. So I think you have to have like a range of these names.
Right. Okay. And that's just nickel we're talking about.
Yeah.
Obviously, people have got lots of options, not just mining. Well, but not just nickel, the commodity, but lots of options within mining and outside of mining.
Oh, for sure.
And portfolio approaches, I think, what most sensible people would advocate. So I buy that. Let's come back to some of the specific things that you've started writing about.
We'll get there.
Yeah. In terms of things that you look for. Okay, the first thing we talk about is the exchange. You talked about, right. You've got to work out which exchanges you're comfortable being on. Why?
Well, if you look at different commodities, do better on different exchanges, right?
Okay.
So, for instance,
is that true from nickel?
Yeah, and then like it's actually nickel does better on the ASX. If we're being honest, the ASX, and the reason is the retail investors in Australia understand nickel. There is a larger number of nickel publicly traded companies for nickel, and so I would say, depending on where the asset is, that makes more sense. Now, for gold, Canadian and North American producers do better, generally speaking, on the TSX. Yeah. Australian producers do better, and there are always exceptions on the ASX. So I think understanding comps for that exchange is important, because if you have peers which look sort of similar, that means you're going to have research coverage. It also means you're going to have like a general body of knowledge among retail and institutional investors, and so it'll be easier for them to get up the curve and potentially invest in the name that you're looking at. So it is always important to think about the peer groups. Now, in a bull market, of course, like probably it doesn't matter as much, but in a market like this, I think you can actually have quite a bit of upward support in these names when you're on the right exchange. Okay, so that's interesting to me. But I'll give you a data point, just not a plug, but Conic Metals, right? The primary asset in Conic Metals is the Ramu nickel joint venture. We discussed. So that joint venture, assets looking almost exactly as Conic does today.
Yeah.
Not quite as good because there's more in Conic. Trading on the ASX was trading at kind of 100, 110 million market cap. Today on the TSX, it trades at 30 million. There's a bunch of other factors in there, but it's just one single example.
Right.
So I think you can find that though across different commodities.
Okay, so but what we're going to do, we're going to piece together lots of moving parts here, and you've got to consider all of these concurrently. Okay, so you've sort of talked about project stage.
Yeah.
So if there's anything more you want to say, you can sprinkle it in later. But I want to talk about jurisdiction.
Yeah.
It kind of comes to the point we made earlier with regards to where your nickel project is. Some countries are better than others. We've got you're dealing with in Southeast Asia, Indonesia. You've got some Canadian plays. You've got Russians. There's a lot of big players out there. Why is jurisdiction specifically important to nickel?
Well, let's look at Cuba. Okay, so Sherritt, which is an important producer of nickel, fundamentally has a problem where a lot of investors are not allowed to invest in that company because they're U.S. or because the fund has U.S. investors.
Yeah.
So then you have a problem with Cuba, even though great mine, great asset, right?
Yeah.
Russia, maybe you don't have restrictions, but at the same time, people have perceptions about Russia.
Yeah.
And so like when you kind of go around, clearly the best nickel assets to invest in would either be in Australia or Canada from the perspective of the market.
Right.
But there are interesting things in Africa as well, like this project. I think it's Sama Resources, right? It's potentially a large discovery in West Africa, but I think it doesn't get as much credit as it would in.
Not heard of them.
Yeah, exactly. In the TSX, or excuse me, in Canada or Australia because of its location. So, look, investors over the years have had bad experiences in Africa and certain countries, and so it just makes sense. Just like in gold. If that asset is sitting in Canada, it's going to have a higher multiple than if it's sitting in somewhere in Africa generally.
It's interesting. So that's in West Africa somewhere. Okay, fine.
I think Robert Friedland invested a bunch of money in it. His technology is on it. Yeah, but I mean, it's an interesting story because it's potentially huge, right? It's just one example of a name where if that same asset was sitting in a different jurisdiction, it would have probably a materially higher market cap.
Well, absolutely. Talking of things that affect different jurisdictional plays. We had a contributor send in a piece about what's happening in West Africa at the moment, and I wish more companies would respond to this, to these sorts of articles where there's a bunch of sort of terrorist activity happening in places like Burkina Faso and southern Mali and Liberia and so forth, and the companies are choosing to ignore these things. And we've had a few phone calls for allowing someone to publish on our site talking about these negative things. But I think it's a great moment for the companies to come on and talk to us and say, well, actually, it's fine. This is going on, which is not good, but it's business as usual for us. It's not going to affect our operations. But rather than bury their heads in the sand and try and get their PR people to tell us we shouldn't be having these conversations. So jurisdiction is important. I think, because we've definitely been caught out. We've definitely lost money, investing in the wrong jurisdiction, and these kind of safer plays or more relevant plays for nickel. Hopefully they will work out for your company. You talk about Indonesia,
PNG.
PNG.
Yeah.
Is it? Papua New Guinea. So apologies. I think.
No, but yeah, same general region. So.
Okay. So how's it doing business there, for instance? Something you must know.
Yeah, we're very fortunate in that because MCC, which is a very large company, is operating the mine.
Yeah.
So I think we're fortunate just because we don't have to deal with a lot of the data. We don't deal with any of the data. In fact, we're not the operators, so we're just a joint venture interest holder.
Right.
And because they're such a big company, I think that they're able to navigate, but it's not without its headaches, right? I think that's true of anywhere though, and you can experience that in the U.S. and Canada as well.
So it comes back to your invest in royalty. It's investing in mining without the mining risk.
Exactly.
You love it. So your job's a lot easier, is it?
Well, it's definitely easier than building a mine, I can tell you.
Right.
That would be tough.
Right. You talk about project types. You get into a lot of detail about this. What do you mean by project type? Is this coming back to the nickel?
Yeah, there's kind of there's if some geologist comes on here, they can criticize and say, well, there's really 20 types, but basically there are two types. the nickel sulphide and the laterite. Those are two of the primary ore bodies that we talk about. The laterite ore bodies have the Hpal process, which is very hard to get right, and certainly has a history of massive cost overruns. Sulphide has always been preferred until the Hpal technology came along, but what you're facing today is the known nickel sulphide ore bodies tend to be lower grade.
Right.
And so it just means you have to process more ore, and the capex, I can't think of a project with under $1 billion capex. I'm sure there's some small project somewhere, but by and large, once again, talking about $1 billion to $1.5 billion, and the market's just not ready to fund that. There's just no actual money to fund a project like that, which is kind of what makes nickel interesting, because there are known projects out there. Dumont being one of the fully permitted ones, for instance.
Got the scale.
But it's probably $1.5 to $2 billion, and no one's sticking their hand up. And if you stick your hand up right now today, it's probably 4 years from commercial, 5 years from commercial production.